All right, three, two, one. What's up, everyone? Welcome to Money Market Truths. I am Mark, and this is
This is Mo from OTB Clubhouse.
man. How'd you do today, Mo? I know
It was
everything was
it
doing
was a great day. I don't think there was much to do with individual tickers, so we've been playing SPX since you can trade them every single day now for 0 day.
yeah, man. That's some good news for all the traders out there. They no longer have to wait until the 0 day mark, I guess, right?
It's good and bad because SPX can take everything away if you're not disciplined as well.
Yeah, if you're not familiar with SPX, and you've just been playing with the SPY, I can tell you this just from experience. Um, it's crazy. It can go from like 70 cents to like $10 in like a minute, and then
Yeah.
also just completely go to zero the next. So it's pretty crazy, but I definitely enjoy it. So Mo, let's get straight into it, man. What's the topic of the week?
One of the things that we keep seeing on Twitter and social media is um, a lot of accounts will post, including myself, hey, I made 300% or 400%. And I wanted to provide some context. I post a lot about this on Twitter because I really love trading psychology, which means how do you react to your own execution, your own results, but it also adds up to how do you react on external factors. So it could be like you're part of a group and you see, hey, I just only made 50% on this trade and someone made 500%. And I wanted to break that down because it's very crucial to understand that you need to look at the context behind the percentage. Does that make sense?
Yes, absolutely. Let's break it
So
down.
so let's take an example. You are a big account. I'm a small account. You basically bought 10 contracts of SPX. I bought one contract of SPX. I followed my risk management. I made 100% on it, and that was my goal. I take profit and I'm done. I switch off Discord. I'm out. On the other hand, had 10 contracts and
Hmm.
you sold, let's say you sold five at 50%, and then you sold three at 100%, and then you sold two at 500% because you're like, I'm just going to let the runners go, zero here, right? If you actually evaluate the total performance that your port did on that trade, it's actually only 235%, or actually 135%.
But be
But
careful only saying only 100. That's still a lot. That's still a
in
lot.
in comparison to saying 500% though,
Yes.
because what you're saying on the Discord, which is fine, that's what we usually, the terms we use is you let your runners at 500%, but your entire port only did 135%, right? And the only reason why you can afford this is because you have multiple contracts. So the reason why I bring this is because people that have been trading for 2 3 years already understand that, but there's people that are brand new to the game. They need to know that that's what's happening. And so if you're small accounts, you still need to follow your rule. The reason why we're bringing that up today is what's happening is you were following your rules, and all of a sudden you see people like making 500%, 600% while you're cutting early. You think there's something wrong with you. So what you end up doing is, I'm going to hold this till zero.
Hmm.
And then that leads to losses. You gave up the system that was working, you become inconsistent. Do you feel like it's ever happened to you?
No, it absolutely 100% has happened to me before, especially on the beginning phases when I first started trading and taking it serious. I would get out at like 30% and everyone else was making 300% in a single trade. And then I got in a bad habit, like you said, of holding longer than I should have. And as you recall, I usually only traded one contract.
Yeah.
So that makes it even harder because if you only have one contract, you don't scale out. If you have multiple contracts, you can scale out at 25%, 50%, 75%, 100, whatever your plan is. It makes it a lot easier. So, so yeah, when I only had one contract, I would definitely hold way too long and then lose profit or actually lose a trade completely. So
Yeah.
that is 100%. Also, just to touch on that, I noticed that there was several YouTubers and people on Instagram. They're not very well known, but I can tell they're trying to like build up their following by showing the percentages, like you just said.
Yeah.
I think individuals need to also understand that when these people make these posts, for example, it's usually on like the Robinhood app. They would show their, 300%, and then they'll block out the amount of contracts and how
Yeah.
much they got that contract for, right? And the reason why I say that, because you get one contract for $7, and if you get lucky, it goes to 14 and it shows 100%. That's not really that big of a win. I mean, in the context, yes, you doubled your money, $7 to $14, but it gives that false perception that you invested a lot of money and that you made thousands of dollars or hundreds of dollars. So you have to be very careful with some of these people as well.
So you bring a good point, and this is a question I asked on Twitter and on the Discord too. What's better, 100% on Apple or 1,000% SPX? The answer is we don't know, because you might be playing with $10,000 on Apple and $100 on SPX. So what matters? Risk management matters. Your position size matters. How long you want to hold the position matters, right? You could be someone who only wants to hold for the first 30 minutes because you work full time, and you know what you're doing, so you can scale heavy. So you could just come in the start of the day, put 10 grand on Apple, make 100% and leave. And then there's another person that buys only one contract on SPX for $1,000 and hold it all day. Which one's better? I don't know. You need to figure out what kind of trader you are. So that goes back to your point. Percentages really don't matter. It's the dollar value at the end of the day. Do you really care at the end of the you retire? You're like, hey, I made 1,000% on my porch. Like, you're trying to hit an amount, right? And
Correct. Yeah.
so I don't know if anyone's chasing a percent here, but everyone on Twitter seems to be chasing it. It's a marketing strategy,
It is. It is because it
right?
doesn't look as cool if, for like you just said, if I make um like 35%, but again, my I put up a lot more money, and that 35% could have got me 3, 4,000. You made 800%, but only made $100. So yeah, you gotta be like really careful and understand the context and what they're posting. So I think people just have to be way more careful these days
Yeah.
when it
It-
comes to like who you're following and what you're paying attention to, and just understand that the percentages mean nothing, like you said. That's a
yeah.
valid point. That's a very good point. It's just good as a marketing, as a sales tactics. It's great. It definitely
See,
works.
it's the same. Like, everything's getting tied down these days, and I think it's because a lot of people are losing interest from trading. And we
Mhm.
need to be transparent here. A lot of people are cutting down on subscription services because when you have, let's say, 100, 200, 300K portfolio, and now it's down 40%, you're like, I don't want to look at it. And even when you're trading, it reminds you constantly that you are in the market. Like, a lot of people just want to shut it down, forget about it, and come back when the market gets normal. And so what I'm starting to see is a lot of these challenges, right? $1 million challenge, 100 to $1 million retirement challenges. And they're no different than those weight loss challenges that say 7 days of juicing and you drop 40 pounds. And I don't think it's not that it doesn't work, but like, look at anyone, any person. They have a different why, have a different effort. So if you want extreme results, you need to put extreme action. Make sense? Right?
Yeah.
In
Yep.
training, though, I remember you did a video once, and it was basically about a person that said, trading could be like an ATM. You could guaranteed make 1,000, whatever, every single day. But like, it's not always like that, because some days are straight, and you might not see an edge, and so you can't. So the challenge won't work. Does that make sense? Because it's based on what the market gives you too. Like, and when I say what it gives you, it's the skills you have. So at the end of the day, it's depend on you. But sometimes you don't have the skill to play that market, which happens to me all the time. Where I'll be like, I don't see anything, but then you'll be like, oh, I see Roblox. It's doing that, and you'll make money, and I won't, because your skill level took you to that trade. It's not that the market didn't give me the trade. I just wasn't skilled enough to make that trade. So a lot of people are using percentages with these challenges, which is a scary place to be, because if you're a newcomer, your goal should be to do a better job at executing your trade and not the money part. But when you shift the focus to money and fast, you get the marketing part done, but the people that are getting in, they're not learning anything. They might get lucky, but they're going to be facing inconsistent results in the future because they don't know what's happening. Because the lead indicator is your execution, the lag is the money part. So if they don't focus on the actual process, eventually the results will diminish, or they're going to have bigger losses.
100%. Speaking of the fact that you said individuals seem to lose interest now in trading, right? You run a group. Are you seeing more and more people leaving?
Yeah, people are mostly either leaving or they're just trading less, and which is like I get it, right? Like we've covered, hey, is trading for you? A lot of people realize it's not for them. A lot of people are going back because their job's calling them back because COVID's done. And then a lot of people are leaving because they're tired of the negative attitude in the market. People, everyone's just frustrated because market only went up and holy shit, what's going on? Because people bought the dip, right?
Mhm.
If you didn't buy the dip and if you held, you still would have been fine. It shows you have patience. People kept buying dips without understanding how low we can go. Um, yeah, it's sad, but people are frustrated because most traders are investors and their investments are down, and so they just want a time off, which is fine. Which is what I recommend people if they're emotionally not doing well.
Yeah, there's a girl that I helped. I kind of guided her where to learn futures the proper way and like strategies that could potentially help me. For example, she I think had a really bad day today. She hit me up and she's like, I'm in that mindset now. Like maybe this isn't for me. And she was doing good for like 3, 4 weeks, but the stuff happened. So I totally get it. If it takes too much of an emotional toll on people, maybe really honestly, it's okay to say
Take a break.
this isn't for me right now. Yeah, just take a break. Maybe wait until the market really reverses and then get in because it's a little bit easier. Let's just be real. During a bearish market, it's a lot harder to trade. I don't know what it is psychologically. It just is.
It's not hard, Mark. I'll tell you the same thing say to everyone. You need to take the investor hat out right now. If you cannot do that, you cannot trade. I spoke to someone and he gave you a shout out and he said, you put him with the comeback series and he learned a lot about leaps and everything. And then now he's using supply and demand to apply the same principles with trading. He said that he only takes one trade a week and he takes it on Friday and his average return on SPX is 200%. And he
Nice.
started with $500 and he's been doing that since December. So he's taken 4 trades a month. He doesn't go over that.
That's good.
And so I don't want people to follow this because I'm not giving trading advice here. You could literally buy a long put and there's no way you're going to lose money on it. That's what like you could just follow the flow. So about 100 million inputs came on for July 17th, right? And
Mhm.
100 million, not 100,000, 100 million came in SPY, QQQ, SPX, IWM combined. The problem that people are facing, and let's be honest, they're trying to buy the dips. They still are, man. In a bullish market, what do? We try looking for any dips and buying it. In a bearish market, any rips that you look, you need to be selling them. What are people doing? They're buying the freaking dips. Like I saw someone boasting about coin going to 70 from 40. It's still down 50% in the last 1 month. So it's not the market's hard. I think because you have investment
Mhm.
and because that's down, it's actually impacting people. Some people, and again, in the Discord, you can't really make this shit up. Some people are having the best time of their life trading right now because they don't care. They're buying puts.
I probably agree with you on that one. I think that might be one of the issues that I definitely have too when it comes to the option side of things. 'Cause I was doing so well, even during the bearish time. I was doing so well. It was 2 months, like I said, about 2 months ago. Something just changed. Maybe it's because my portfolio started going down really bad,
It is
where I'm
that.
like, man, I need to go back up, and that's why I just switched to futures because it's just easier. Click sell, boom, click buy on the quick reversal, the relief rally days or whatever, and I'll be fine. But nah, yeah, I agree. I agree. It's if you can master the skill of really taking the emotional aspect out of things, I think you could be really successful at this.
Well,
'Cause
yeah. So look at this. SPX every single day gives you about 100 points to 200 points up and down every single day, almost every day. If you can be patient, trade, and then get the hell out of there, which I don't do, I'm trading all day. But if you could just leave, close the computer, you're fine. People are buying the dips and then they got frustrated. I think for the most part, most people are recognizing what's happening in the market. Um, and as long as we're covering these bases and people are actually listening to our podcast, it'll make a lot of sense on what's happening and why it's happening and why you should cut the noise. Like you should not really take um, part in these, how should I say, exaggerated results because most of the time that's a good way to clap your account.
yes, I have a buddy text me every single day. He just plays SPY as well, right? Puts and calls. And he's happy with getting 30 to 40% because he's doing it consistently and he is
Yeah,
fine with it. And he used to be a guy who used to get like 150, 200%. Now he's like, dude, I'm good. He usually typically buys 2 to 3 months out a put.
yeah,
Even if there's a relief rally, he does not freak out. He's like, dude,
yeah,
it's going to go down. I know it already. I'm looking at the market. There's nothing indicating that the market's going to go up.
yeah,
And then he just waits until another massive drop, makes his 35, 45%. He's like, I'm done. Cool. Thank you. Rinse, repeat. Does it every single time.
yeah.
Actually, kind of makes me mad sometimes. I'm like, stop sending me your freaking success stories.
Yeah, like
Oh,
if you don't like the volatility and let's say the market rips one day and you go buy again, not a financial advice, you end up buying Friday puts because you don't like the volatility on 0 days, there's a very high likelihood you'll make money. We've had 7 red weeks.
yeah, it's bad. If you go into the weekly, you can see. You can
Yeah,
see. Even
right.
on a monthly, man. Even on a monthly, it's been consistently red.
Yeah,
So, but yeah, let's move on to the hot topic. By the way, so everybody who's listening, dude, the recession is over. We're at the bottom. It's time. I'm telling you right now, it is time to start buying all the growth stocks. I'm talking about Honest. I'm talking about Tattoo Chef. I'm talking about Peloton, Palantir. It's time to buy every single one of those, including QQQ, because the bottom, it's done. Do you agree?
of course not, man. I don't agree because
No, I'm just saying this because there's so many. I'm already seeing it on Twitter and Instagram. People are already saying this. They're like, "Yo, this is the time. Start buying all these growth stocks." I'm like, what are you talking about?" And it's funny because like right when we started this podcast, I want to double check to see where Zoom is at
yeah,
because Zoom earnings apparently they did really well at
yeah,
4 p.m. We're shooting this at 6 p.m. At 4 p.m., I saw it and I was like, "Man, it was up over 18%."
yeah,
Over 18%. And that's why everyone's like, it's over the recession. It's over. You got to start buying these beat up stocks. It's buy the dip, buy the dip, buy all these crap stocks. I mean, I did a whole video on it with the shit stocks. And people are sitting there bragging, talking about it's time to buy these. Oh, buy them now because 5, 10 years from now, you'll thank me or whatever. But you don't know that, man. Half of these companies are gonna die during this.
yeah,
It's just like a dot-com bubble, man. Not every single stock survived. Some
yeah,
did, some didn't. But the reason why you were talking, I was looking this up because I want to make sure that I was giving proper information. Dude, Zoom was up 18% at 4 p.m.
yeah.
It's only up 4%. It completely collapsed. I don't know what happened, but it ran up to it was $108 when I was looking at it at 4 p.m. and now it's $93. So it's only $4 over where it closed today, which is crazy. But that's what I kind of want to talk about Zoom. I'm kind of shocked that it even did well. I'm shocked that it even ran up. Do you believe in Zoom?
Well, it's not that I don't believe in the company itself. They apart from subscription, they don't have anything else, right? How many people are actually using paid subscription? And what are they doing with the unpaid subscriber? Are they selling their information? Are they targeting them for ads? They're not doing any of that shit, right? And in this environment, companies that aren't making profits or aren't um, undervalued are going to get sold. Like, man, honestly, I don't want to this arc, but probably Kathy was buying it at those prices when we ripped, and some smart fund probably started shorting it after hours, or people started taking profits, right? Because people know that this bear market's going to stay, and no bear market has ended at 30 VIX, right?
Yeah, yeah.
So it's not over, and it's sad that people are getting trapped into this. Like, and I don't know how long it's going to stay, but uh, buying good companies even now, like if you told me you were buying Apple, right? You said you're buying Apple at 136, it goes to 100. You know, you never know, but managing your risk, you understand what the company brings on the
Mhm.
table in comparison. If Apple dies tomorrow, there's a very good chance the rest of the spy falls with it because it's second top holding for Apple. So you're just putting money in safer bets, right? Personally, the way I would do it, right, I would average down on less risky investments if that's what I had to do. I would wait for confirmation on the garbage until we know what's not garbage. So I'm okay buying coin for 150 bucks, right? We need to get more information. I'm not okay buying coin right now, which is at 60, because it can go to 30, right?
Say that again. You're okay with buying coin at
Now,
150, but not
so
where it's
right
at now?
now, I'm okay with buying good companies. Like you want to buy
Yeah, yeah.
SPY shares, you want to buy QQ shares. I know you have something pretty cool too that you want to talk about, and it's much
Yes.
cheaper. But I would not be buying like Palantir. I wouldn't be buying Peloton. Like that's where if I'm buying that, I'm expecting zero. I would
Yeah.
buy that later when all the shit's over. I might not make as much, but I would buy it on confirmation.
Yeah, and that's what I don't understand because it's these YouTubers. I'm talking about some of these like really popular ones, and obviously they are selling a course. But I've noticed they're just like these characters on CNBC when there's a relief rally. Everything's going up. It's great. It's
Yeah.
time to buy. It's time to buy. But then tomorrow, the Fed is speaking. I'm pretty sure the Fed's speaking
Yeah.
tomorrow.
Yeah,
And
Powell speaking tomorrow.
yeah, I mean I can't guarantee anything, but I'm pretty sure things are probably going to dip. If not tomorrow, Wednesday.
We're down. Tech is down 2% after hours because of what's happened with Facebook. They said they're not going to provide guidance because of the market ahead of the environment, and then that's why I think Snap is down 30% right now, and because of that, Facebook is down 7%.
What happened with Facebook?
So basically, when an earning comes out, there's two things that matter: what the company did now and what the company is going to do in the future, which is called guidance, right? Market is forward looking, and so are we. Snap just I'm not sure who because I'm coming straight into the podcast. Someone from their team management said that they will not be giving out guidance, meaning the numbers for next quarters, because they don't know the market condition, and because of that, it's sold. I think. Let me check.
Dude, this is not good. Oh god, this is what drives me nuts. Like I got shares in Facebook, a ton of shares. Actually, not a ton of shares for a broke person. Let's be clear. But I have several $1,000s in Facebook, and
So
I'm
Snap was 22, and now it's down to 1575, and because I think that's about 30%, and then Facebook is down from 198 to 180. This doesn't
I
end
mean,
yet.
yeah,
This
yeah.
doesn't end yet. The bear market doesn't end yet. There's way more to it. There's a lot more fuel in the tank. Um,
Oh
so
Lord,
yeah,
snap! That's crazy. Now I definitely know that's probably like a trader's love story right here, right? For Snap, $15. It's probably going to jump up at one point significantly and then drop again. But that's so that's really low.
yeah.
$15. That's probably the lowest I think Snap's ever been. Correct?
Let's check.
That's insane. Yeah, man. Facebook. I'm holding it. I still believe in it. I still think it's going to be a successful company in the future. It's definitely going to just take an ass beating for the next year, 2 years, 3 years. Who knows? But that's what I'm saying. If I had a bet between Snap or Facebook, it's obvious. Facebook, right? You agree?
Yes, Snap
Yeah.
filled the gap for 19 October 2020. Finally,
Oh,
so now we're
okay.
there.
That's
Um,
where. Okay.
yeah, man. Like Mark, like let's say you have 100K and you put 4K into or 3K into Snap, you'll be fine. I think what people are doing, they're putting 30 to 40% on individual stocks,
Yeah. Yeah.
and that's it's just not never recommend. Like there's a really good book by Ray Dalio. I can't think of it on top of my head, and he goes over how you should organize your portfolio. It's amazing. Everyone should go through it because we only talk about tech. There's more to stock market than tech. So
Absolutely, and I learned that too as like an investor when I first started. Again, I got really heavily into this back in 2020, and all I did was buy tech. And we've seen what it can do when you just have all your investments in one sector. It
yeah,
completely destroys your portfolio. So there's definitely a balance that I've been shifting towards more ETFs. I've been shifting more towards ETFs. Um, I don't like the REITs right now because you and I both agree the housing market is probably going to collapse. However, the only REIT that I'm invested in is IIPR because it is in the marijuana business, but they're renting out the land to the grow houses and stuff. And it's like literally at one of the most crucial demand zones right now. That's the only reason why I end up getting it. But you have to diversify at this point. People need to just stop looking just at tech. Don't get me wrong, S&P 500 is mostly tech, right? But I think it's very healthy to look at stocks that are not always super popular, that you don't always hear on YouTube, that you don't always hear on Twitter, which leads me to what I'm going to talk about here next. Just real quick, before I start getting into the stock that I'm going to talk about, remember this is not financial advice. This is for educational purposes only. So remember, I am not a financial advisor. I have zero licenses. I am just an average guy who's been learning about the stock market. So this is no way a recommendation. What you should do, you should definitely seek out a licensed professional and financial advisor for anything that we talk about here on this channel. Once again, this is not financial advice. Let's get to it. So this is the ETF.com comparison. So a lot of us actually continuously focus on the normal ETFs that we see over and over, which is typically VOO, VTI, VUG, whatnot, IVV. But there's another ETF. It's like the baby brother to SPY, and it's SPLG. It's only like around 40 some dollars right now. I was invested in VOO for a year and a half, 2 years or so, and I sold right before the dip. And again, this stock VOO is literally like over $400 at that time. I don't know how much it is now. Let's see. It's probably like in the 300s now. But the average person, like if you just don't have a good job or something where you can afford to drop $400, yeah, it's 364 now. If you don't have money to buy a bunch of shares every single month in VOO, you can look at SPLG, which is literally the baby brother to SPY, and everything is very similar. If I scroll down right now, you can see that the expense ratio is similar. The AUM is very different. Now, obviously, the AUM is way more on SPY, on VOO, and SPY. Obviously, a lot of people trade. A lot of people get options on that. This is probably not a good one to have options on. They are cheap, and maybe if you want to do like leaps in the future when the market really turns around, it's a small investment. Your return is not going to be something super crazy like on VOO or SPY, but it's safer. So the reason why I end up selling VOO is because I want to start accumulating a whole bunch of shares and start selling them off down the line. So once I sold my VOO, I started investing into the SPLG. I think, around $45 or so when I started investing into it, and I sold it at $51. And I've slowly been scaling back in. But again, I don't recommend anyone invest into anything right now until the market really turns around, till we see a clear direction. But
Mark,
just
no recommendation.
yeah, no, I'm sorry. Yeah, no recommendation. Again, I'm not a financial advisor. Up to you what you want to do. I'm just saying that this could potentially be a better choice for people who don't have a lot of money, and if you want to accumulate over 100 shares in a quicker manner than you could on VOO. Again, everything is really exactly the same except the AUM. Because, like I said, it's not a great stock to or ETF to really trade or whatnot. So again, it's SPLG. And right now, so this is just me personally. This is a level that I have set up. I'm gonna buy a lot more shares at 42.86 if I see a real clear direction wherever the market is going. Because again, I don't think we're out of this bearish territory yet. But as for the levels and stuff, I'm seeing 42.86. And that's the only thing I really want to touch on. And if you go to my YouTube channel as well, Trading with a Dummy, I did a whole video on it when I was doing that ticker a week where I would cover one ticker per week. And SPLG was on there. And I just noticed that a lot of people don't talk about it. It's just very affordable. It's in the 40s. So again, if you don't have a lot of money, this might be one you want to eye.
Awesome, man.
Yeah, that was it. So, and now you want to go and do some training when it comes to option trading, some strategies, right?
Yeah. So my target's always been able to find simple tools that people can use to basically understand macro better, because a lot of people started with micro, meaning day-to-day trading, but they don't understand the macro environment. And if you can combine both of them, you can understand why you trade and why a trade happens a certain way. So the first thing I want to talk about is, anytime you're looking at any trade, always start by looking at what the long-term trend is. So basically start with a higher time frame and then go to a lower time frame. What I want to cover today is Bollinger Band. band last week we talked about it, um, but I didn't really get into what the indicator is. So I'll go over it in detail. So we're looking at a daily chart for SPX, and we're using. I'm gonna take these trend lines out. We're using Bollinger Band. Bollinger Band basically, on average, most companies that have BB, so Trading View or Transpider, they'll have a 20-day simple moving average, and the above and bottom line are basically standard deviation. One's a positive, one's a negative standard deviation. Um, the way I look at this is if something is on the top of the Bollinger Band, it's overbought. So it's kind of like RSI, but it's more effective. And then the bottom one means it's oversold. I don't ever use this on individual stocks because let's say you put this on AMD and AMD releases new chips. You can be overbought for all day and you guys will basically be out way too early. I use this mostly for indexes and I use this mostly on range days. If we have a clear trend day, you're going to see us go something like this. It's basically going to keep topping off, but the candle will never get outside. So it's perfect if you're looking at for a range day. So that's another thing that I want to talk about was what is happening here. Hold on, let's go. Yeah, we're daily. So most of these trades that happen in the Bollinger Band, they're expected to be about 90%. Only 10% of these candles actually happen outside the band. And if they do go outside, like in this case here, they jump back in pretty quick. And I'm talking about indexes, not individual stocks. Individual stocks can stay there much longer. Usually, if we are in a bearish market, if there's no strength, you're going to see something like this where it hits the midline and it drops. If we are in a position of strength, which you can confirm from flow and whatnot, and what if there's news, you get the touch on the top. So I'll show you the trade that we took today. Was just right here. We basically saw the bounce at 39.73. I got into SPX 39.80 for $2.80, and it basically went to, I believe it went to $9. But again, I sold it way before because this market, you want to take profits on one, and depending on what your position size is. But let me quickly show you the trade. So the trade was taken. It was a very quick trade, and because it happened late in the day, give me 1 second. It happened right here. So added the 39.80 when it went outside, and because we were trending up all day, so this was around 280. At around here was $9, but I sold it around here for around $8. um Apart from that, my goal is to talk about BB next session as well, and if anyone has any questions, just feel free to email it to us or DM it to us on our Insta page and we'll go over them. But that's it from me, Mark, sorry.
Yeah, hey, close. Hey. I always want to be called Mike, but yeah, man. So yeah, that was pretty much it. Again, just don't get too overly excited during these relief rallies is the biggest takeaway I would like to leave people with, because I know you will see it a lot on some of these really popular YouTubers saying that this is what we're talking about. You should have bought the dip. You should have bought the dip. But then 3 days from now, you may really be pissed that you did buy the dip. But like you said, Mo, I mean, a good suggestion, and again, this is a suggestion, just buy, I guess it's maybe average down on some of the positions you've had for years if you want to. But me, I'm actually gonna just cool off
Yeah.
for the next couple months, really, like for real, for real. I know I say that like every time, but I'm like, ooh, Microsoft is at 250. Oh, Apple's at 130. Like I'm really like for real. I'm not buying anything anymore for the next couple months because I don't see any reason right now for the market really to turn around. It's just too much going on with the Fed, with the recession, with the interest rates, with the war, with the economy. It's just everything's a mess right now. So that's just my 2 cents, man. You want to leave the audience with anything before we tune out?
Yeah, man. The only thing I'd say, just remember this: no technical indicator is perfect. The only thing that will ever help you, that's stuff that's within your control, which is your position size and your entry. Everything else, the market decides.
Absolutely. If you're a trader, you should be managing your risks. If you're an investor, don't invest money that you are not willing to let sit for a very, very long time. So that is it, everybody. Again, my name is Mark, and this was.
Mo from OTB Clubhouse.
And you can follow us here. We have our Instagram right there at the bottom, but definitely follow us on the Money Market Truths. We're trying to pump this YouTube channel up. So go there, follow us, subscribe, share it with friends, and we see you guys next week. Peace out.